Oftentimes, people are a little intimidated to pick up the phone and call a lender, and they kind of want to figure out ahead of time, what do I qualify for on my own before I call a lender and give them all my personal information? So let me help with an easy equation on how you can figure that out. You want to take your gross monthly income and take 46% of that. That is a safe bet for most conventional loan options of what you would qualify for. Now you took 46% of your gross monthly income and you're going to subtract out any minimum payments or required expenses every month that would pull on your credit. For example, your card loan, a minimum on a student loan, a minimum on a credit card. Add all of those things together and subtract it from the 46% number. Whatever is left on that payment or in that monthly amount, that is what you can qualify for in a monthly mortgage. That number has to include principal, interest, insurance, and taxes, or maybe mortgage insurance, depending on how much you're putting down. If I totally lost you in the numbers, feel free to reach out to us. That's what we're here for. We'd love to help.